Good morning from the Before They See Me. This is Chris Robinson with your comment here today on some good action. Yesterday we got the USDA ending stocks as well as planting intentions number. No real major surprises. We did have really good action though. 1 month lows followed by 6 month highs in both new crop corn and new crop beans. The spread to watch, it was the funds are now buying corn, buying new crop corn, selling beans. That's the first spread to watch. Secondly, you got to keep your eye on July NOV. 10 trading days ago, July NOV broke down to $1.75. It's back out to $2.50. You know, if last year is an indicator at all, these guys are probably going to try and run it back up to $3 positive, maybe more. We've all known that the stocks were tight. We got confirmation of that. Now, the big thing is you got to watch money flow. The funds are long 180,000 beans. They're not going to back off from that now. They're long 250,000 contracts of corn. Ditto. They're not going to back off from that now. They're going to continue to support this stuff. They're actually even long wheat, but not as much, about 40,000 contracts of wheat. Today, wheat's lower. Everything else is higher, making new 6 month highs. These are markets, in my opinion, that you want to be looking to buy dips on. If you do get long, you want to make sure that you've got a good sell stop to protect yourself against, a 20, 30 cent flush. But from watching the money flow, the funds have made this macro bet. A lot of people are talking about a macro bet where they want to own commodities. They're going to continue to support it. It's only April 1st. Guys are betting on El Nino, a possibility of El Nino, which would be a drought. So, these guys, they've got their position on now. They're going to defend it. So, rather than fighting them and looking for a big correction, your best bet is to look to buy dips and go with them. Now, the other thing I'd be watching is the stocks. The stock index is making challenging contract all-time highs. June, mini Dow futures, it made its high back on New Year's Eve. It hasn't been able to take that out, and here we are April 1st, and it's challenging it now. The other level to watch in the S&P minis is the 1880 level. We've got Friday unemployment. It's all that's going to be a very big number. But you've also, when you're looking at the stock indexes, what time of the year is it? Well, between now and the next 2 weeks, people are doing their taxes. They're going to be sending in more money to fund what they didn't fund for their IRAs and their KIOs. So that should be supportive. There's more money coming in. People are always more comfortable buying when we're making new highs. I think that unless we get some drastic craziness off the unemployment number, you're going to continue to see money coming in and supporting these indexes. How high is too high? I don't know. There's still a lot of people out there looking for the big correction. The correction we got in February was only 7 or 8%. Then we turned right around and ground up all those shorts. We're going to start looking at round numbers. With the stock market at 16.5, people are going to start talking 17,000, 18,000. The big round numbers will be attractions. Ditto for the S&P. 1,800 opens the door up to, the next big round number, which is, 2,000. Now, you don't have a whole lot of people beating the bullish drums yet, which is good. When you start seeing people on the different media outlets, they start bringing in the guys talking about Dow 50,000 and S&P, 5,000. That's probably going to be a sign that we've come too far. But for now, this market continues to swallow up every bit of bad information, have a little bit of hiccups, then grind higher. And if you are stepping in trying to sell these new highs, you better be very careful, because if it flips on you, the resistance right now could end up being really good support for the next 2-3 months. So that's about it from the Before They See Me. This is Chris Robinson. Have a good day.